Doctor, can you see me?
Yeah, I can see you. I think you can try uh, presenting your slides, maybe. Either does it work or not? Okay. Okay. Assalamu alaikum wa rahmatullahi wa barakatuh. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة وأتم التسليم على نبينا محمد صلى الله عليه وسلم وعلى آله وصحبه أجمعين ومن تبعهم بإحسان إلى يوم الدين أما بعد. Welcome back to this special lecture again on investment in Sharia-compliant shares. Islamic Economics Association of Kuwait University would like to welcome you all to this session and to other sessions as well. And we are very much happy to have you all in our all lectures and sessions every day. So, as a part of events and programs organized by Nadil Iqtisad al-Islami, Jamiat al-Kuwait, last week we had a wonderful session with Dr. Muhammad Faruk Abdullah on personal debt and wealth management. And today we are going to have another wonderful session on investment in Sharia-compliant shares. Islamic Economics Association of Kuwait University is trying to promote Sharia-compliant standards, strategies, and models globally. Hence, we are having like more than 9,000 or 10,000 participants every week in our programs every day. So this is a great service to promote Sharia compliant standards globally and also our strategies to serve students, lecturers, professionals, bankers, and to spread the proper Islamic banking and financial knowledge and strategies. We conduct lectures, trainings, and programs which cover normally general topics of Islamic banking and finance, marketing, investment, and equity market, and also some specific topics like retail market and also products, fintech, and so on. So this is very much a wonderful session and wonderful platform, global, we can say global platform for Islamic banking and finance. So today, Dr. Faruk Abdullah is with us, who is an expert and also a lecturer in the University of Sultan Zainul Abidin, Malaysia. And Dr. Faruk obtained his PhD in Sharia from University of Malaya, Malaysia. And his bachelor degree was in Fiqh and Usul al-Fiqh in the International Islamic University of Malaysia. And he has also degree from INSIF, a Global University of Finance and Islamic Finance and Banking. So as far I know, he has many articles and publications in this field. So we are very much honored, Dr. Muhammad Faruk Abdullah, to have you today in this session. And we welcome you and we invite you to conduct this lecture on investment in Sharia compliant shares. So please welcome Dr. Faruk.
Thank you very much to Dr. Muhammad Mahiuddin. Alhamdulillah, Alhamdulillahi Rabbil Alameen, والصلاة والسلام على النبي الأمين وعلى آله وصحبه أجمعين أما بعد أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي آمين. So, respected moderator, Dr. Muhammad Mahiuddin, dear audience, the students of the University of Kuwait and other universities and lecturers, would like to greet you with the Islamic greetings. Assalamu alaikum wa rahmatullahi wa barakatuh. And very good afternoon, because it's 5 p.m. in Malaysia here. So I'm really honored, alhamdulillah, and glad to be here again after 1 week. So the last week it was really a very fruitful discussion on personal wealth and debt management. And today I will continue on investment in Sharia-compliant shares, which is one part of the wealth management. And here, inshallah, I'll be talking about the Sharia screening process and what are the different components of shares in Islamic share market. So let me share with you my slides first. Okay, so the topic is investment in Sharia-compliant shares that I thought would be more appropriate rather than the investment in Sharia-compliant share markets, because there's no fully Sharia-compliant share market at the moment, I would say. Well, so my presentation will be on the Sharia compliancy of the shares, how to make sure that some shares are Sharia compliant, and what are the components in or investment opportunities or the ways we can trade shares or invest in shares. And finally, maybe we'll talk about some issues on this regard. So why, but before I start, as an introduction, some may ask why Sharia compliant shares, okay, just to give a background that the first of all, as a Muslim, we believe that we need to make our income halal. It should be, as the Prophet sallallahu alaihi wasallam mentioned in one of the narrations, that if someone's flesh and the blood is grown by non-halal or haram income, that will not enter paradise. So how important to have halal income. And we know that if we invest in conventional shares, the income might be non-Sharia compliant because of the nature of the company. If the company is involved with activities like gambling or non-halal products, producing non-halal products like pork, okay, or some other kind of things. So that's the income that we get, or the dividends that we get from that company will not be halal for us. So therefore, we need to look for Sharia compliant shares. So if we look at the very basic of a share, okay, from the Sharia perspective, whether actually buying share or to own a share, whether it is Sharia compliant or not, the scholars, they conclude that it is allowed in the Sharia to own share. Okay, the equity ownership, it resembles the concept of a musharaka in the Sharia, where one partner provides capital the partners they provide capital and share profit and loss. Okay, and in Sharia there are different types of musharaka. So when we buy share through the share market, usually the type of musharaka that we get involved is shirkatul inan. Okay, shirkatul inan is a type of partnership where it does not require all the shareholders to have equal partnership and equal responsibilities, where it means that in shirkatul inan there might be some sleeping partners, and there might be some partners which are actively managing the business, and therefore the profit sharing might be different as well. However, the loss sharing will be the same. So this is the shirka al-inan. So basically, to own a share, to buy a share, it is halal based on the concept of musharaka. Well, related to this, there is one debate among the scholars concerning the modern day corporations, where the modern day public limited companies were not there during the time of Prophet Sallallahu Alaihi Wasallam, and these companies have limited liabilities. It means that whatever monies the shareholders put in that company, the company will be liable up to that amount. The creditors cannot go to the shareholders and take money from them. Rather, the creditors will get from whatever inside the company. So whether it is allowed in the Sharia or not, there are some differences of opinion, but the majority of the scholars they concluded that it is allowed because it is considered as a legal entity in the Sharia, and we can see there are some examples in the past where the Sharia allowed a legal entity, like for example is Baitul Mal, okay, the public treasury, where someone can borrow and then the money can be invested. Similarly, a wakaf fund or cash wakaf fund, where money can be invested from that fund. So it was allowed in the past. So based on that, majority of the scholars, they concluded that the public limited company should be allowed, considering the maslaha or the public interest of the people. Okay, I can see someone raise hand, Ali Al-Asiri. Should I take the question?
Doctor, let's see if he to ask. I think no. I think
okay.
Or mistakenly he raised the hand. Or we can take questions or any compliments, maybe or comments at the end. Inshallah.
Okay, sure. Okay. So when we talk about Islamic equity market or share market, so usually these are the components. There will be stock exchanges where there will be Sharia-compliant stocks will be traded. Similarly, at the stock exchanges, there are also mutual fund, Islamic private equity, Islamic ETFs, and Islamic real estate investment, or we call Islamic REITs. So these are also equity instruments, and they are also traded in the exchanges, except the Islamic private equity, because it is mostly privately done. So we'll talk about all these components afterwards. Okay. So let us see the indices of Islamic share markets, or these are some of the examples of Sharia compliant indices around the world. As we know that the index is very helpful for us for benchmarking and to comparing and to know the growth and the up and down of the market. And the most famous indices around the world is the Dow Jones Islamic market, and then in Malaysia, Bursa Malaysia, under Bursa Malaysia, they have two indices. One is FTSE Bursa Malaysia Hijrah Sharia, which is mostly to cater the foreign investors, and FTSE Bursa Malaysia Emas Sharia is for local investors. We have S&P, Standard & Poor's Global Benchmark Sharia Index, FTSE Islamic, MSCI Islamic Index, okay, and Jakarta Islamic Index, even in Hong Kong. So these are the indices can give us the growth of the Sharia compliant shares. So now, so the Malaysia was actually the first Muslim country with a conventional stock market to have come up with a formal evaluation for Sharia compliant stocks. And so the first Sharia screening, okay, so that started is actually in Malaysia. That they started to screen the Sharia compliant shares from a conventional share market. And after that, the Dow Jones, it started in 1999. They also started their Islamic index with the screening Sharia compliant shares. And then, which shares are halal, which shares are not halal? There is a criteria for that, and in Malaysia, the Bursa Malaysia, or the Share Exchange or Security Commission of Malaysia, they have a Sharia Advisory Council that is called SAC. So they have a criteria to screen, to filter the Sharia compliant shares. Similarly, Dow Jones, even though it is a US based, but they take Sharia advice from prominent scholars from Middle East, like from Kuwait, and like Sheikh Al-Ghari, and then Sheikh Qurradagi, and some others. So they also have a criteria to filter the Sharia compliant shares. However, there are some differences. As you know, it is quite common to have differences of opinion among the scholars. So based on their differences, and also based on the geographical differences and situations, there are some differences to how to filter these Sharia compliant shares. So I'll be sharing some of the screening method of these Sharia compliant shares. Okay, so first is the Malaysian screening process. The Sharia Advisory Council of Bursa Malaysia, or Malaysia Securities Council. So if we look at the Sharia screening, so they have at first they have two types of criteria. One is qualitative, and then the quantitative. Okay, and the first, they will look at the line of business or core business of the underlying company. That will be the qualitative part. And secondly, they will see the company's finances. They will see the quantitative part of it. So for the qualitative, okay, it is we agreed to all that the companies that are involved with non-halal activities, like if the company's operation is based on riba, like the conventional insurance or conventional banks operation involves gambling, for example, like a famous Malaysian corporation like Genting Highland, which is famous for gambling, which is prohibited. Okay, and activities involving the manufacturer or selling of non-halal products, okay, like non-halal foods, alcohol and others, and activities containing an element of gharar. So any kind of activities that has some kind of uncertainty from Sharia, for example, insurance business, or even conventional share trading. So all these, so the companies that involve with all these activities, they will be excluded from the list. Now, after we exclude all these companies, so now there is a question of the companies, they are mixed. So what does it mean mixed? Means they are initially good companies, they are not involved with all the prohibited activities mentioned earlier. However, and these companies, they're doing something which is beneficial for the society, okay? However, these companies, they have a very small amount of income, okay, which is not Sharia compliant, or these companies, they might have debt, okay, which might be substantial, for example. So whether they are Sharia compliant or not, okay. So in that case, the scholars they allow, okay, of course, it should not be allowed at the first place that any company has any even a very small amount of non-halal income. It should not be allowed. However, the scholars, they allow, given the situation, the realities that at the modern day with the big corporations, they are operating and they have transactions, too many transactions, and they have international transactions where most of the platforms are non-Sharia compliant. So this, considering this, the umumul balwa, which is because of the we can say the dorura, or the needs, because of the situation or the custom of the business, they have allowed a little portion of it. And we can see also some of the scholars, okay, we have Is bin Abdul Salam, I'm quoting from Brother Shakur Dalvi from his research, okay, he mentioned that one of the classical prominent scholar, he said that if the permissible money is more, that is 1 dirham of the prohibited money is mixed with 1,000 of permissible money, then the transaction is allowed. Okay, so if the non-halal element is so minimum, okay, where is 1,000 is the halal and the only 1 dirham is haram, so it should be halal, because to do justice for the halal one. Similarly, also we can hear from Taqi Usmani, Sheikh Taqi Usmani, one of the famous scholar in Islamic finance and the former head of the Sharia advisor of AUFI. He also mentioned, if a company is engaged in halal business but also keeps its surplus money in an interest bearing account, where from a small income, okay, of interest is received, not all of the company's business is regarded unlawful. So based on this opinion, we can see that a little bit minimum portion of non-unlawful income can be tolerated. And we have also seen the scholars, the fuqaha, when they discuss about al-ghubun, means when there is inequality or there is some kind of defect in an item when we purchase an item, and if there is any defect in it. So if the defect is less than 5%, it is sometimes forgiven based on the type of the goods. Okay, even for real estate properties, if there is a 20% defect, it also could be tolerated. So that the scholars took that into consideration. And also when we see some other example, like the fuqaha also discuss when there is a good pure water, okay, and when a small amount of impurity, mixed with it, whether the water will be impure or not, the majority of the scholars said not, if it is very little. And also the color, if the color of the water or the taste, okay, the color, the taste, okay, or any of it little bit change, okay, whether it is still pure or not, the scholars have some kind of benchmark. And similarly, we have some narrations like the Prophet Sallallahu Alaihi Wasallam during the time of war, where there are a lot of corpses of Muslims and non-Muslims. So whether they should be, after the war, there are a lot full of corpses. So whether they should be buried as Muslim or non-Muslims, so because they are mixed. So the Prophet Sallallahu Alaihi Wasallam considered them, all of them, Muslim, because the Muslims were the majority. Okay, so based on this, okay, if we do not, if there is, if we say something is okay, a portfolio, okay, of asset is, we can say that it is non-halal because of very little bit of it. So we may have done injustice to the one which is halal. So considering this factor and the situation, financial situations, the majority of the scholars, they allow and they come out with some kind of benchmark of to allow the non-halal income for the companies. Okay, so for Securities Commission of Malaysia's Sharia Advisory Council, so they will, for the mixed companies, okay, they will again check the basic core activity of the company. It must not be forbidden. Okay, the public perception of the company must be good, and the core activities of the company have maslahah, which is beneficial for the society. And the haram element or the non-halal income is very small and very insignificant, and it involves something called umumul balwa, is a common plight, or is a need or necessity because of the business customs. And also in case of Malaysia, where the Muslims are 55%, and the rest are the non-Muslims. So there is considering the rights of the non-Muslims, where they have also the right to do financial activities. So considering their rights, they allow this little, they tolerate a little bit of this non-halal income. So after fulfill this criteria, okay, so there will be two. First is the qualitative method and the quantitative phase. Okay, so first for the quantitative methods, okay, there will be two things that need to figure out. First is to determine the earnings and the profit before tax. Okay, first, to determine the earnings, the revenue, and also the profit before tax, PBT. And the step 2 is to identify and measure the income or earning and profit before tax from the non-permissible activities. So the first, we need to know the total income of the company, and also the total profits of the company before tax. And then we need to know the portion of the non-halal income, okay, the earning from the non-halal, and also the profits from that non-halal activities or non-permissible activities. So after we get that, so we have to follow this formula to calculate. So determine we need to get the percentage. So first, when we get the earnings from non-halal activities, how much is the company's earnings, okay, from non-halal activities, we have to divide by the total earnings of the firm and multiply by 100. So when we get the answer, it should be less than 33%. Okay, and then for the similarly, we also need to get the profit before tax from the non-halal activities, and that we divide by the profit before tax of all activities of the firm and multiply by 100. So once we do that, okay, the result of both should be less. Okay, so once we do that, so the result should not cross a certain benchmark. Okay, so first is the 5% benchmark. So what is the 5% benchmark? Is the companies with earnings and profit before tax from non-permissible activities is more than 5% will have the stock excluded from this list of Sharia compliant shares. So if a company, if we calculate in this, okay, if we get one company and they are earning from the non-halal activities, or even their profit before tax from the non-halal activities, if either one of these exceeds the benchmark of 5%, then the company will be excluded from the list. However, this 5% benchmark is for the companies income from purely non-halal companies earning, okay, and profit before, okay, will have this profit is from interest income, for example, or from activities like conventional, okay, conventional activities like producing a non-halal food, for example, the income from that. So that one has 5% benchmark. And then the second is the 20% benchmark, okay? So this threshold mark for hotel and resort operation share broking businesses. So if a company has an income which is not purely non-Sharia compliant or unlawful, but it is like doubtful. So the example of this like hotel business, okay? So hotel business, whether it is Sharia compliant or not is doubtful, because in hotels mostly they serve sometimes alcohol, and they have some of them have unlawful activities like music, disco, and others. So income from the hotel business and resort operations or share broking business, because not all the shares are halal, so they are somehow doubtful, the income. So in that case, there will be a 20% benchmark. Means if a company's income, okay, if a company's income, revenue, okay, either one, revenue, or if the company's profit before tax, okay, if it cross more than 20% from the total profit before tax or total revenue of the company, then it will be non-Sharia compliant. So it should be less than 20%. So if a company has income from a hotel business, and if that income is less than 20%, then it is tolerated based on the screening. But if it is more than 20%, then it will be non-Sharia compliant. Okay. So now after so these two was about the core business activities. Okay, and now is the recently Malaysia's Sharia Advisory Council, they also come out with the quantitative measures, where they also calculate the debt ratio, and also the bank's cash or receive the bank's cash placed in the conventional bank. So they have two more benchmark they have recently developed. Actually, in Malaysia, they used to have for this qualitative, they used to have three benchmark. One was another one was 10%, that was for tobacco, but they have removed it, and because they now tobacco is under the 5%. Okay, so if we look at this benchmark, okay, the cash placed with conventional bank accounts, okay, okay, that's divided by total assets should be less than 33%. So here they will take the total asset of the company, okay, and then they if okay the cash placed in any conventional bank account. If that company has cash that they place in conventional bank account, so that should not be more than 33% of the that should not be more than 33% of the total asset of the company. And secondly is the debt ratio. Okay, the total debt divided by the total asset should be less than 33%. So if the company has debt, okay, and the company, if we take the total asset of the company and if we divide it, so the debt should not be more than 33%. So if it crosses 33%, it will be non-Sharia compliant. Of course, they do not publish what's the reason for this, but what we can understood is that if we buy share of a company and it has a very substantial amount of debt, so we actually do not buy a share. It's like we buy debt, so that may actually trigger the issue of like buy uddain or selling debt when we are trading it. Okay, and this 33% also. This benchmark, this is also based on the scholars' ijtihad, okay, their juristic reasoning, because in order to make sure that it is not something significant amount, okay, and they refer to the hadith, the prophetic narration that where one of the companions of the Prophet sallallahu alaihi wasallam, Saad, when at his sick bed, he wanted to make some bequest where he wanted to donate all of his property, but the Prophet sallallahu alaihi wasallam prohibited him and asked him, it is better that if you do not donate all. And then he at the end he said he will donate for 1/3, and the Prophet sallallahu alaihi wasallam said, okay, 1/3 is enough. Is a big enough. So means based on this hadith, they made the scholars, they made an analogy, means that if something is less than 1/3 is not enough, it is considered a minor. If something is more than 1/3 is considered major. So based on that, the scholars, they put this 33% benchmark. So if in a company where the debt is less than 33%, means the debt is a minor thing, it's not a major one. Okay, while there are some other screening, they put 50%. Okay, so it is based on the ijtihad or the opinions of the scholars. Now, after the company has passed all this financial screening, okay, and then the Sharia scholars again will look back, look at the company's, the image of the company, okay, and they also will go on case-by-case basis, okay. Some companies, even though they have passed the financial benchmark, but maybe they have a bad image. Maybe their core activities, are not beneficial for the society. So they may not consider it Sharia compliant. Okay, so they will again look at this image of the company, the core activities, the maslahah, the public interest. Then the share can be declared as Sharia compliant. And what's the good thing in Malaysia is that they will do it every 6 months and they will publish it. So this is I took the screenshot from the Securities Commission of Malaysia, where every 6 months they will publish the list of halal share, which is not available in other Sharia screening like FTSE or Dow Jones. They will not publish their list. We have to buy it. However, in Malaysia, they make it public. It is available for all. So that the second last screening was on November 26th of 2020, and the latest one was 27th of May 2021, where they published the list. So if you download this PDF, they will tell us what is the criteria for their screening and what are the shares and what are the new Sharia compliant shares and what are the shares their Sharia compliancy have changed. So we can have a look at this document. Okay, so after the Malaysia's Bursa Malaysia's shares, okay, of Malaysia's Security Commission, we will look into Dow Jones. Okay, so this Dow Jones, it has a different little bit of different screening than the Malaysia's SEC. So this Dow Jones, they also similarly with the Malaysia, they begin with an initial step that involves eliminating stocks of all companies involved in all exhaustive list of activities: alcohol, liquor, pork, conventional financial services, hotel, entertainment, tobacco, weapon manufacturing, and others. So all these companies will be excluded. Okay, and then at the second step, okay, the quantitative analysis of the firm's financial ratios. So they will see the excessive leverage or the debt ratio. And also they will identify the firm's unacceptable levels of interest income. And so this is also done by this formula. Okay, so what they will do is first they will see the debt ratio. Okay, but in order to calculate the debt ratio, they will get, instead of getting the total asset, here they will take the 12-month average market capitalization. Okay, where in Malaysia they actually take the total assets of the company, okay, the fixed assets and others, but here is the difference. Here in Dow Jones, they will take the market capitalization for 12 months. They used to have 24 or 36 months before, but recently they make it short for the average market capitalization of 12 months. Means, and market capitalization is the price of the shares multiplied by the number of shares. So which is actually quite volatile. It changes because of the the sentiment of the investors, the situation of the business. So they will compare the total interest-bearing debt. Okay, they will divide it with the 12 months average market capitalization, and the threshold is 33%. So if it is more than 33%, it will be non-Sharia compliant. And then the liquid assets to 12-month average market capitalization. So here they will take all the cash, okay, cash put into the kept into the conventional financial institution. So the cash deposit here, the marketable securities, means bonds and others, interest-bearing instruments. So all should be added, okay, and then should be divided by the 12-month average market capitalization, and also the threshold here also 32%. And the third one is the receivables, the company's receivables that the company should receive. The cap means sometimes the companies, they sell on credit, for example. If they have receivables, that receivables also should be less than, should be 33% or less. Okay, so account receivable, trade notes, and other receivable. Okay, and so account receivables, trade notes, and other receivables, all from their balance sheets, they will add up and divided by the 12 months average market capitalization, and the threshold is also here 33%. If cross 33%, it will also be Sharia non-compliant. So that's all about the Dow Jones. So we can see that there's differences between Malaysian one and the Dow Jones one. The first is we can see here the Dow Jones, they are taking the market capitalization of the shares, where the Malaysian Security Commission, they are taking the total asset of the company. We'll talk about the comparison afterwards. So let's see another important one. Actually, there are many screening. So I will be talking about 3 here. Okay, this one is a Standard and Poor's. Okay, so they introduced their Sharia indices also in 2006, and its Standard and Poor's has contracted with ratings intelligence partners to provide the Sharia screen and filters the stocks based on this screen. So they rating intelligence partners is a London or Kuwait-based consulting company. They are specializing in solutions for the global Islamic investment market. This is their initial screening. At first, they will exclude all these companies, advertising and media, but not all of them, like a newspaper and newspaper or TV channels, like for kids or for geography, they will not exclude, but any other TV channels, okay, like for cinemas or music, they will exclude. Okay, alcohol, cloning, financial, any financials means the non-Sharia compliant financial institutions. Okay, gambling, pornography, tobacco, trading of gold and silver means trading and gold of silver without following the Sharia requirements means they're selling on deferred basis, not on cash. So these are the companies that have this kind of activities, they will be excluded. Okay, and then also comes the financial ratio. So they also so they have a little slight different here. Okay, 49%, and here, okay. So they also take mention that market value of equity. So I guess this is also the similar to the Dow Jones market 12 months market capitalization. But here they take for 36 months, which is 3 years. Okay, so they will take the debts, okay, the total debt of the company, and then they will divide by the market value of the equity, means 36 months, okay, the market capitalization. So it also should be less than 33%, okay, it should be less than 33%. But for cash compliance means for account receivables or market's value of equity, okay, the threshold here is 49%. So it's like it should not be more than, okay, so here is different, okay, where the other they take 33 is 1/3, but here they take it half, means less than half the account receivables, means the debt that the company will receive. Okay, and then the third one is the cash, and then interest-bearing securities, or means cash means here the cash hold in the conventional financial institutions. Okay, so all of these added types of cash, okay, divided by the 36 months average, it also should be less than 33%. So you can only see the slight difference here is about on the receivables, where the criteria is 49%. So that's a slight difference from Dow Jones. Okay, so here also revenue share from non-compliant activities. Okay, in certain cases, revenues from non-compliant activities are allowed if they comply with the following threshold. So with that financial analysis, okay, the S&P, they will also allow some kind of non-permissible income like interest income if they are less than 5%. If the revenue of the company, okay, if the revenue of the company is less than 5% from the interest-bearing income, then it should be tolerated by S&P. Okay, such accounting-based screen are not applicable to companies which are run on a fully Sharia compliant basis, and such companies shall be considered compliant. Okay, so S&P also, they have excluded, means that the companies that are fully Sharia compliant and they have Sharia advisors, so those companies will not go through the financial screening that we have discussed just now. So this financial screening will not be applicable for companies that are managed by Sharia that are monitored or supervised by the Sharia scholars. Those the companies that have Sharia scholars and they do their activities based on Sharia, so they will not go through. They should not be screened based on that financial criteria. So here is the okay. So here we can see the S&P also, they somehow at the middle between Malaysia Securities Commission and the Dow Jones, okay, where the Dow Jones does not consider, but here Dow Jones they consider, okay, as 33% the income, but here in S&P they have another benchmark that the interest income should not be more than the 5%. So if we look at these three types of screening, okay, so we can see maybe the Malaysian Sharia scholars, okay, they are a bit tolerable, but as we know that Malaysian screening is based on considering the situation in Malaysia, and they are not an internet, they're not really intended for international investors, okay, so they consider the situations, the Muslim population and also the business. At the same time, they have developed their screening criteria, especially the financial factors. On the other hand, we can see the Dow Jones and S&P, they are very stringent on the use of balance sheet, but we can also see the difference also between Dow Jones and S&P, with the fact that Dow Jones, they consider the market capitalization, but the SEC, they consider the total asset. Okay, so if total asset, it is quite fixed, but if we consider the market capitalization, so it is quite volatile, and it can also have an issue, means when there is a market crash, so the company also can go can be non-Sharia compliant because of the price of that share, price of that company share will go down. So that can be that's a debate among the scholars, okay, whether we should take the market capitalization or the total asset. However, these are what we can say, these are the ijtihad or the juristic reasoning of the scholars. And these are minimum differences where on the major issues they all agree. However, still there are studies that show that if these screening criteria are used on certain types of shares, there will be a major differences, okay, but after the development of financial ratios by the Securities Commission in Malaysia, it is reduced, and there's not much difference between Dow Jones and S&P. Okay, so when we talk about the Sharia compliancy, so there is one important factor, is very important, is socially responsible investment. Okay. That in the West, it is quite popular that of socially responsible investment. Because we have the Sri Sukuk or what, so they are actually concerned on the kind of investment which is ethical, which is not harmful for the environment. It's not causing any pollution, for example, and it is conserving the energy, that it goes with the sustainability and the consumer protection and human rights. So these are actually generally the socially responsible investment. And Islamic, so whether is it possible to combine this both, the Sharia compliancy of the shares and also the responsible investment? Well, if we look at the Sharia, okay, generally the Sharia is flexible. Okay, if we look at halal and haram, prohibited and permission, yes. After a share is halal, it might be unethical. Maybe the share is halal, but it might have be harmful for the environment, for example. Okay. However, if we look at the Maqasid Sharia perspective, that the Maqasid Sharia, the objective of the Sharia is the protection of human being and their future generation and also their properties. So the Maqasid Sharia tells us that we also need to protect the environment, and we need to conserve, okay, the energy, and we need to be sustainable. And even the scholars, they argue that even sustainability is one of the Maqasid al-Sharia. So if we look from this perspective, then we can see that even though the ethical requirements, it might not be mandatory, but they are encouraged from the Sharia perspective. Or in some cases, it is also required. So if we try to converse between the socially responsible investment and also the Sharia compliant, yes, it is possible. Mostly they converse, okay, they have more similarities. In some cases, the Sharia may not require these principles, but those principles are also encouraged to have from Sharia perspective. And recently we have Wahid Invest is a global, okay, a robo advisory. It's a kind of mutual fund, okay, that they do investment, and also they have a screening, and they are able to converse the Sharia compliant screening with the ethical screening with their own Sharia advisors, and also advisors from ethical investment perspective. Okay, so with the shares, okay, investing in shares in the share markets, we have some other elements that are components that also we can invest, especially for those who want to invest in Sharia compliant shares, and we may not be able to go to shares and go to share markets and buy. Okay, so we have an option. For example, somebody from US, maybe he may not be able to invest directly in Malaysian share markets. Okay, so for them, it will be helpful if they go to the mutual funds, for example. Okay, or for somebody in Malaysia to invest in US, that would be better if they do through the mutual funds. So we have mutual funds, ETFs, REITs, and also private equities. That's also part of the Islamic equity market. So usually the mutual fund are the pool of funds, okay, where they collect the investments from a number of individuals and institutions, and they make their investment in shares, in bonds. So those who are the Sharia compliant unit trust companies, they must make sure that they invest in Sharia compliant shares. Okay, so there are some goods and some advantages of this investing through mutual funds, because we can get diversification, because they pool the fund, they have very big amount of fund, and they can invest in different shares. Okay, they can buy different types of assets. So we can have benefit from the diversification, and they have professional fund managers. So they are very expert on share markets. So we can benefit from that, and low liquidity risk, because we can anytime liquidate. We can take back our investment, and the pricing is very easy. It's based on the net asset value, so we can buy. and range of products to match needed risk profile. Usually the mutual funds, they will provide us a different types of products. If we want to invest only in shares, or they have fund for that. They have a fund for lower risky, higher risky, for shares, or for Islamic bonds or sukuks, for example, or Islamic money market instruments. So they have a different types of products or investment opportunities. So for the Islamic mutual fund, they have to follow the criteria that they must invest in Sharia-compliant stocks, sukuks, or Islamic sukuk or Islamic money market, and they should have a Sharia committee to ensure that their investment are Sharia compliant. Okay, so the basic contract for use here is the mudarabah and musharakah, and the mutual fund, the fund manager can be considered as a wakalah here, and they can be wakil, and they invest on behalf of the investors. Okay, or it can be also mudarabah, where they can also share the certain portion of the profit. But generally they use wakala because they will take their wakala fee upfront, so they will and then so they will not share the profit and loss. Okay, with the mutual fund, there's ETF, Sharia-compliant ETF, which is also a new innovation, and ETF is quite similar like the mutual fund, but ETF is very good for the new investors where we do not, they're not maybe expert, and if they do not know the shares with the company shares. So ETF usually, it is when we buy ETF, we actually buy a number of shares, a basket of shares. So ETFs, they usually will buy a number of shares, okay, from different sectors or from index, okay. So let's say ETF Titan, okay, US, the Malaysian, the first the ETF that they started, okay. So they took they bought 50 shares, okay. So that will be less risky for us because when we buy ETF, so we are actually buying all this portion of this the 50 shares, so that is less risky. And the difference between ETF and mutual fund is that the ETF, the price, the wakala fee is very less, and it is not as actively managed as the mutual funds. Just now I mentioned the my ETF DJIM Titan 25, that was okay, underlying is an index of 25 Sharia compliant Malaysian companies. Okay, so that was the first ETF, and recently we also have a commodity ETF that invests in different types of commodities and Sharia compliant and sector focused ETFs as well. That's these ETFs, they are investing in technology sectors. These are on healthcare, for example. Okay, other the ETF is the real estate investment REITs, which is also and very good opportunity for the investors, where those who are not able to invest directly on real estates, okay. So these are the companies, okay, they will pull the fund from the investors and they will invest in the real estate. So the good thing in the REITs is that even though with a small amount of money, you are able to invest in the real estates. And there are some criteria to make it Sharia compliant by the Securities Commission in Malaysia, okay. It should be the real estate investment trust is governed by the Sharia principles, and it should be supervised by the Sharia Advisory Committee. And the REITs must ensure the activities of the tenants currently renting their property are Sharia compliant. So when we are in the REITs, the companies investing in real estate, okay, when they are renting out properties, they make sure they are not renting for someone to do gambling activities or non-Sharia compliant activities. And for Malaysia, they have one exclusion here is that there's a 20% benchmark here that if the existing tenant, okay, has some kind of non-Sharia compliant activities, so that should not be more than 20%. If a portion of the rental is from existing tenants involved in non-Sharia compliant activities, the REIT must ensure that it does not exceed 20% of the rental. So that is the criteria, but they should not allow any new tenant who will involve with non-Sharia compliant activity. This one is for existing tenants. In addition, the Sharia advisors of the fund must ensure that no new tenants whose business activities may be non-Sharia compliant are allowed. And Islamic REIT is only allowed to insure its properties using takaful, except in case of necessity. So for property, there's another condition. It should be insured by takaful companies, not the conventional insurance. And allowed to invest surplus funds only in Sharia compliant investments. Okay, so the first Malaysian REIT was Al-Aqar, which was in 2006, and recently there are many REITs listed in Malaysian Bursa Malaysia, in the, like KPJ and others. So after the REITs, there's another one is private equity. Okay, it is not for all, it is only for high net worth individuals because it requires a big amount of money. And instead of just investing, it is actually requires a commitment that someone will be investing a particular amount of money for a particular amount of time. And there is a lock-in period. Once you invest, you cannot take out your money immediately. So these are the conditions for Islamic private equity, and it is very volatile, and the return also similarly very high. But again, these are for only high net worth individuals because it requires very big amounts for investments. Okay, so this Islamic private equity also requires the Sharia scholars to oversee the investments. Okay, and of course, it will the Sharia compliance also will change the risk profile because of the types of assets that they are going to invest. Like the Sharia compliant shares, okay, they will put the different types of risk like Sharia risk, but at the same time, as we know, the Sharia compliant shares they have less debt. Okay, so that might be another positive side for that. So that's all about the instruments. So finally, I would say just mention about some of the issues that's going on in some share markets. Okay, and one of them is the day trading. Okay, where buying and selling. So this is one of the issue, and many will ask whether this is Sharia compliant or not. So again, the scholars they have differences of opinion, but all agreed that we should not sell something that we do not own. Okay, and when we buy something, even though we do not physically possess, but it should be confirmed through the system that I am the owner, I bought it, it should be confirmed, then we can sell it. Okay, so that is the requirement, and scholars generally they allow once we buy, I'm the owner, so I'm able to sell it okay, anytime, whether it's one day. However, considering the speculation in the market or the gambling factor, and we know the very basic ultimate objective of share trading is musyarakah, which is to join to profit to join the company's business and to share profit and loss. So considering that factor, some of the scholars they do not allow the day trading, means to buy and then to immediately sell. Even in some countries, they have regulation that once you buy a share, you should be hold for one T+2, means that day and for another 2 days, because or it takes actually time to change the ownership. Okay, so that's the day trading. Another one is the margin trading, where in the conventional market, where someone is given, someone just pays a little margin and then he gets a big amount to do share trading by the brokers. So here, in the conventional setting, of course, the broker will charge high interest, which is not allowed. But from Sharia perspective, there are some Sharia platforms or some brokers, they provide this margin trading based on Sharia, where they use the murabaha or tawaruk transactions, where they will sell some share to the person, so that you will buy and that share, and then you will pay later on with profits. Okay, and then that share you will be able to buy. So it's like going to be a tawaruk, okay, which the scholars, even some of them allowed it, but that's actually not really clear on the how they on how especially the brokerage firm, how they do it. Okay, I'm also not very sure on that, but if they do tawaruk, yes, it is the Sharia compliant. Okay, and another issue is the short selling in the share market. The short selling is not allowed in the Sharia, because again comes to the issue of that you should not sell something that you do not own. Okay, however, some of the platforms, they also have arrangement to have a Sharia compliant short selling, with considering the Hanafi opinion of Al-Fuduli, that a wakil or a representative, unauthorized representative, if he sells something, and then after that, if the principal allows it, then the sale is valid. So based on that, there are a minority group of scholars, I would say, they allowed some kind of Sharia compliant short selling, but the conventional short selling is not allowed because of the ownership issue. And if also the preference shares are not, the conventional preference share is not allowed in the Sharia, because the profit is confirmed. Okay, it is guaranteed. So when the profit is guaranteed, it is not allowed in the Sharia. Also there is initiatives by the scholars to have an alternative to preference share or Islamic preference share, with the concept of tanazul, waiving the rights. But that's also debatable among the scholars. It's a very minority group of scholars. They allowed the preference share based on the concept of tanazul, waiving the rights. But the majority still do not allow this, because it goes against the very objective of the contract of musharaka, which is profit and loss sharing. So we cannot make a condition that goes against the ultimate objective of the contract, so it will be invalid. So it's also again a debate among the scholars. And finally, the derivatives instruments. Derivatives instruments, the conventional instruments are not Sharia compliant because of the issue of gambling and also riba. There is initiatives to have Islamic alternatives of derivatives based on the tawaruk and wa'at. So there are some Islamic swaps, Islamic options based on tawaruk and wa'at. However, they are not listed like the conventional one, but they are mostly especially the swap is usually they are agreed upon between the companies. And the scholars, they allow derivatives is for risk mitigation. The Sharia allows derivatives for hedging, but not for speculation. Then again, there is an issue where if somebody is hedging, the other party will speculate. So it is very difficult actually to find what is the borderline if somebody, and what is the intention, whether somebody is going to hedge or somebody is going to speculate. So that's the question is still going on, the debate is going on, but the scholars, they said, as long as it is, we know it is for hedging, it is allowed, and they allow it in only for limited structure. So that's all on the issues in Islamic capital market. So I think that's all from me. So I thank you all for listening, and yeah, I welcome if you have any question.
Okay, thank you very much, Dr. Faruk. MashaAllah, that's really a wonderful and informative session. And we got to know a lot of things, and also your well explanation, I hope, benefited all attendees today. Thank you so much again. So we now open the floor for any questions or any comments or any addition from the attendees. We know there are many doctors, many professionals and lecturers join the session. So if you have any question or any comment or any additional point, please either you may raise your hand or you may write in question and answer section. So I think there are 2 questions. No, thank you very much. Okay, compliment. Okay, most welcome. I can see Dr. Faruk, many of them are thanking you for this wonderful session. They are appreciating the lecture. Yes, we are still waiting for questions or comment from the attendees. There is someone raised hand. Okay, let's take some questions from attendees who raised hand. Ustada Rama. I think this is Ustada Rama. Please welcome, Ustada. We switch on microphone for you if you have any question. Ustada Rama is with us. Okay, let's take Muhammad Ali, Mr. Muhammad Ali. Please welcome Mr. Muhammad Ali.
Yeah, good morning and good afternoon.
Yeah, good afternoon.
Yeah, I'm calling from Nigeria. Okay. My question is here in Nigeria, we don't have too many Sharia-compliant shares. So presently, for me personally, there is an application. It's a US-based application, software kind of, that I use to invest in US stocks. Okay. And because I don't have so much experience in buying and selling of shares, so I put it on auto. So they buy and sell shares on my behalf automatically in US stocks. So I'm just asking, as a Muslim, of course, I would want to invest and do things that are 100% Sharia compliant. I'm just asking if there's any kind of software or application that you know of that I can use to trade Sharia compliant stocks. That's my question.
Yes, thank you. Yes, Dr.
Okay, thank you very much for your question. Yes, you cannot actually go to directly invest in any share market. You need to go through brokerage firms. Okay, so you can register in any international brokers. Okay, that will allow you to invest in this Sharia compliant investment. Okay, so if you ask me about the software, just now I mentioned the Wahid investment. Okay, so they are Sharia compliant and ethical, and it's a kind of mutual fund. Okay, so once this one you just need to install an app in your handphone. Okay, so once you install the app, you will be able to invest in Sharia compliant stocks in the US.
Okay. Okay. Thank you very much.
Okay, thank you very much, Dr. Faruk, and thank you, Mr. Muhammad Ali, for your question. Okay, let's see, Mr. Abdul Fattah. Mr. Abdul Fattah, welcome. If you have any question. Abdul Fattah Hakani, Abdul Fattah, are you with us?
Yes, I'm with you. Assalamu alaikum warahmatullah.
Alaikum assalam wa rahmatullah.
Yes, I want to thank a lecturer for this beautiful presentation that has been made. And may Allah increase in knowledge and reward him abundantly. Secondly, the app he just mentioned, can it be downloaded on the Play Store? That is number one.
Okay, I don't know whether your country or has any restriction, but it is in Google Play Store, Wahid Investment, WAHED, Wahid.
Okay, thank you, sir. Secondly, on the issues surrounding the capital market as regard the day trading, margin trading, preference sharing, and what have you, which aspect of it does insurance fall? Is insurance also included in one of the, what do you call it, the issues surrounding it, or is excluded?
Insurance is considered one of the prohibited financial, So if insurance companies involved with insurance business will be excluded from the Sharia compliant shares.
Okay.
So they need to convert to takaful. Yes.
Okay. But will you please explain better on preference sharing and relationship that exists between preference sharing and the one before it? I forgot it. It has to do with share. As you mentioned, you mentioned day trading, other day trading, the margin trading. And after that one, I think there's one before preference sharing. It also has to do with it. It has to do with share. When you were explaining, I want you to explain the difference between preference share and the one before it.
Okay. The preference share is a share where your dividend is fixed. Okay. Means that the company will promise that you will get a fixed dividend. And then second thing is that when the company goes bankrupt, okay, so you will be preferred, okay, preferred to the ordinary shareholders. Okay, so that is the preference share. So, okay, that's we generally know. Of course, preference share has also different types. So that was not allowed in the Sharia because it's a musharaka. When we buy share, it is musharaka. And in musharaka, we must share profit and loss. And if one of the partners guarantees the profit, so the contract is invalid in the Sharia. Okay. So there are some initiatives, as I mentioned, by the scholars to give an alternative or Islamic preference share where, like those who are the ordinary shareholders, they will give a condition, like they will say that they waive their rights. Okay, they give preference to them. Okay, to some shareholders. Okay, so that's based on the concept of tanazul that they use. Okay, and so that the preference shareholders, they will get their profit first. After they get their profit, then the ordinary shareholders will get. Okay, so it's not the same as the conventional preference shares, but they try to give an alternative. However, still it is debatable among the scholars, because this kind of condition, the waiving the right tanazul, goes against the objective of the musharaka, which is profit and loss sharing.
Thank you. Yeah, thank you very much. A short video on how to get or how to receive a certificate from this Nadil Iqtisad Islami from our institution. So before we go for this video presentation, I take the last question from Mr. Said. Mr. Said is with us. Welcome, Mr. Said. Can you hear us? Can you hear me, Mr. Said? Hello? Your microphone is on, but we can't hear you, Mr. Said. Okay, we have some more questions we'll take after this video presentation. So الآن نحن سنعرض لكم فيديو المنصة الجديدة مدارج إصدار الشهادات. فندعوكم لمشاهدة الفيديو. So I think brother Ustaz Yahya is here. We present a short video for you.
سعيا لخدمة طلبة العلم والارتقاء بمستوياتهم، يسر نادي الاقتصاد الإسلامي الإعلان عن منصة مدارج لإصدار الشهادات، بوابة خاصة لكل طالب. إمكانية التحقق من مصداقية الشهادات، إمكانية تغيير الاسم، كيف تعمل المنصة. بعد حضورك إحدى المحاضرات التابعة لنادي الاقتصاد الإسلامي، يقوم النادي بإنشاء حساب شخصي لك، ثم تصلك رسالة إلكترونية عبر البريد تحتوي على رابط المنصة، اسم المستخدم، كلمة المرور. قم بالضغط على رابط المنصة، ثم أدخل اسم المستخدم كما هو موضح في الرسالة، وأيضا كلمة المرور. ثالثا، اضغط على شهاداتي. بعد الدخول إلى لوحة التحكم الخاصة بك، قم بالضغط على شهاداتي. هنا سوف تظهر لك جميع الشهادات الخاصة بك. بإمكانك الضغط على تحميل لتحميل الشهادة. كما يمكنك تعديل الاسم بالضغط على تعديل الاسم الكامل وكتابة الاسم الصحيح. انتبه، يسمح لك بتعديل الاسم الكامل مرة واحدة فقط. الرجاء التأكد من كتابة الاسم الصحيح. بعد ذلك قم بالضغط على حفظ. كما يمكنك تعديل كلمة المرور وإدخال كلمة مرور قوية. تم تسجيلك في منصة الشهادات بنجاح. مرحبا وأهلا بك في منصة مدارج الخاصة بشهاداتك في نادي الاقتصاد الإسلامي. شارك الآن وارتق معنا بسلم عضويات النادي. نادي الاقتصاد الإسلامي، التأصيل والتميز.
Okay, thank you very much, our logistics committee of Nadil Iqtisad Islami and Ustaz Yahya. Thank you very much for this video. So we can see here now another question from Sister Hind. How do we achieve a balance between global market demands and Sharia? And does it affect sales in general? Dr. Faruk, it's in the chat group, the question.
Okay, so this big question actually, the market demand, and well, there's not much difference in terms of the shares. Okay, most we can see generally, like in Malaysia, like we have 80% shares already. They are Sharia compliant. Only like 20% are not Sharia compliant. So the markets, if you look at the share from the share markets perspective, I would say the Islamic financial instrument, the shares, they are quite enough, and there are very few of them, okay, companies that we cannot invest. So that is, I would say, the test from for us, and actually the Sharia that we need to follow. But well, maybe the in between, there are some companies, they cannot be Sharia compliant because of their interest income and that. So we can see the Sharia scholars are catering. They have been flexible. They allow certain kind of, 5% benchmark, and it's changing based on the situation. So I would say that the Sharia scholars, they are always responding the demand of the market. Therefore, you see in Malaysia, for example, they used to have a very flexible, screening. They allow 10% tobacco, okay, income from tobacco businesses. They allowed at the beginning, but after that they prohibited it. Okay, so the Sharia scholars, I would say, they are responding to the demand. And that's why the screening, the scholars, they are revising. And so far, in terms of from the share markets perspective, I would say it is quite okay so far for the investors' demands.
Thank you, Dr. Faruk, for the clarification. Mr. Said would like to ask again. I think he's here.
Assalamu alaikum.
Alaikum assalam.
Wa rahmatullah.
May Allah reward you, Dr. Muhyiddin, for organizing such a great webinar, and may Allah reward you, Dr. Muhammad Faruk, for giving this deep insight about Sharia compliance investments. My main question, Dr. Faruk, is we here have in the West, in a country like Australia, we have some companies who works in meat export, halal meat export. And as you know, it requires to move a large amount of money for each shipment. So in order to lock a certain price for our customers, for example, where I work for one of those companies actually at the moment, so I just want to make sure that I'm not participating in non-halal compliance in a way or another, serving this company and facilitating their processes. So what they do, so they give the price for a customer, let's say for 10 shipments, which equivalent to amount of, let's say, $500,000, right? That client need to pay in US dollar after, let's say, 2 months. Okay. Now, in 2 months' time, the exchange rate between the Australian dollar and the American dollar will be volatile, will be changing, obviously, right? So what they do, they go through a broker who sell them or who offer them either a spot rate when they want to exchange that money from Australian to US or vice versa. Or sometimes they offer them, which is here my exact question, they offer them something called forward contracts, where they buy a large amount of money, let's say $1 million, okay, but they don't receive it physically in their bank accounts. Now, in 60 days' time, the company, that broker, comes back to our company and they say, hey, you have $1 million need to be settled. So you either exchange it with the Australian dollar that you have, or you need to sell it. And based on that time, after 60 days, it may make a loss or a profit out of the actual locked price. So is that process is halal or Sharia compliant or not?
Okay, mashallah. Thank you very much, Brother Said, and for this very good question and interesting question. Okay, so this situation needs a big elaboration, and this involves actually FX forward or currency forward. Okay. So if your company needs to do this, okay, so they need to, when they buy exchange US dollar, so it involves Bai'us Saraf. Okay, Bai'us Saraf is currency exchange. So for the Sharia requirement for Bai'us Saraf is that it should be on the spot, and it should be on the spot when it is a different currency. Okay, so this is the basic Sharia rule. So when they do this forward transaction of this currency, basically it does not follow the Sharia. Okay, however, in order to cater this situation, and this is really a market need, okay, so the Sharia comes out with an alternative, okay, and that is, they call it Islamic FX forward, okay, or Islamic forward, where they will use a wa'ad or promise, okay? So where they will not do the contract transaction of Bai'us Saraf at that day, rather they will just log the price, okay? They just say, okay, we'll exchange with this amount, US dollar with Australian with this rate. And this will be a wa'ad, just a promise, okay? And according to the Sharia, wa'ad is not a contract, okay? So when they do the wa'ad, and then the exact day they will do the Bai'us Saraf, they will exchange the US dollar with the Australian dollar. And AUFI has allowed it, okay, with this way, okay, with the one wa'ad, and the wa'ad is not a contract, okay. So this is the alternative of the Sharia. So if your company does this way, it is Sharia compliant, and there will be no issue on that. Okay, so I have written one paper on also Islamic FX forward. Maybe you can search, Google search Islamic FX forward. So that actually explains in detail of this, inshallah. And this Islamic FX forward is allowed by AUFI and majority of the scholars using the concept of a wa'ad. There's no issue on that, considering the market needs of to do forward transactions. I think it is clear, Brother Said.
Yeah, Jazakallah khair, Doctor. I don't want to take too much time from other participants, of course, but may Allah reward you. Yeah, that answers my question in a way or another. May Allah reward you.
Okay, you are welcome.
Said, thank you, Dr. Faruk.
Okay,
I think we are almost at the end of the session. There is no more question I can see. Okay, on behalf of the نادي الاقتصاد الإسلامي في كلية الشريعة والدراسات الإسلامية بجامعة الكويت, we would like to thank our attendees, participants from around the world, my lecturers, professionals, and brothers and sisters. Thank you very much for joining us. And we hope that you will continue joining our programs in English and in Arabic as well. So thank you again. May Allah reward you. And we thank our members in Nadi al-Iqtisad al-Islami, all directors and also coordinators, and especially our Director General, who is Dr. Alal Ubaid, for their effort and for their continuous programs and service for this Islamic banking and finance, and also other skills program that we are organizing every Sunday and every Tuesday. So we thank them all, and also, of course, our special thanks to Dr. Muhammad Faruk Abdullah for your time, for your valuable time and effort, and may Allah bless you. Indeed, these two programs and lectures are very informative, and also you well explained all the strategies, and also you showed some key strategies and ways. And today also, alhamdulillah, we benefited very much for your lecture. So Dr. Faruk, if you have any concluding remark, please welcome.
Okay, so I just would like to thank the audience, and I would like to thank the Association, Islamic Economic Association of the University of Kuwait for providing this very wonderful platform to share our knowledge in the field of economics and muamalat. And thank you very much to you, Dr. Muhammad Mahyuddin, for arranging such an wonderful event and also moderating all the sessions. I have been following the events, and I see a lot of notable speakers of the Islamic finance. They are giving talks here. So I feel proud and fortunate to be here. And okay, I thank Allah subhanahu wa ta'ala for all the beneficial knowledge shared, and I'd like to apologize for any shortcomings or any lackings. Okay, thank you. Jazakumullah khairan. Assalamu alaikum wa rahmatullahi.
Walaikum assalam. Most welcome, Dr.
Assalam wa
Faruk. Inshallah,
rahmatullah.
see you again in next programs, inshallah. So with that, we conclude today's lecture here. Thank you again. May Allah subhanahu wa ta'ala accept our all effort and deeds, good deeds, and this wonderful Islamic khidmah and service. With that, we conclude here. Subhanakallahumma bihamdik. Ashhadu an la ilaha illa anta astaghfiruka wa atubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi.